Can Netflix deliver other big hits like Squid Game?
Hey, good morning. Thanks for having me on. I mean, yeah, that's kind of I guess, the million-dollar question. I mean, I think Squid Game's one of those. It's an impossible situation or a hit show to forecast, right? They acquired it for a relatively low amount, around $21 million, and boom, it's been obviously a hit across the globe. I think the bigger, longer term story about Netflix is just kind of what they're doing with their recurring franchises. We have, Narcos Mexico is coming out with another season later this year. Cobra Kai has another season, and then next year you have Stranger Things and Ozark coming on back on again as well. They added Seinfeld on October 1st, which will help lower churn. So that's really the key to the story. Just their continued success to reinvent, their content. And obviously, they recently announced an acquisition on the video game side, which is a way to kind of keep them relevant with the Gen Zers of the world as well. So, I mean, it's clearly Reed is aware of the challenges, aware of the competition, and Netflix just seems to be one step ahead of the curve. And I think with Squid Game, that kind of just highlights how early they've been in terms of non-English content production and acquisitions.
Yeah, looking at subscriber growth, most of the new subscribers that were added this quarter came outside the U.S., Joel. Asia Pacific region contributing 2.2 million in paid net new subscribers. What do you make of CEO Reed Hastings' international strategy, his ability to continue to get new customers to join Netflix at a time when there's competition, there's concerns about pricing power, and whether customers in some of these markets across Asia will spend money to get a Netflix subscription when it's much cheaper to log into some of the domestic ones in their respective countries?
Yeah, that's going to be the one kind of issue, and that's why you're seeing this sort of, that you highlighted earlier, the pullback in the shares. The sell the news reaction we're getting right now. It kind of highlights there's signs of saturation in more developed countries. I think in U.S. and Canada together, they've only added 88,000 subscribers year to date, and clearly they're going to have to rely on growth from those lower ARPU countries, and that's going to be the one problem. I still think there's pricing power in the model in North America, Western Europe. But that's going to be the interesting to see over the coming kind of 12 to 24 months. Do they have the wiggle room to kind of raise prices, in India and kind of Southeast Asia, where they are kind of, again, acquiring that growth, but it's coming at a lower ARPU. So that's going to be kind of the wild card to the story. And I think that's why one of the reasons why the stock is lower. Again, signs of saturation, developed world, a little bit of sell the news reaction,
Right.
and higher content spend in Q4 as well.
But there are an overwhelming number of buys on Wall Street when looking at Netflix, and we've seen shares pop by as much as 20% in the past 2 months. As you point, stock is down right now. What are you recommending clients? Do you buy on weakness? Do you wait this out? Or what's the trade?
I mean, I've actually heard it on your program last night, I think on Fast Money, one of the panelists said, so I can't really take credit, but I thought it sums it up really well. Netflix, very rarely do they come out and overpromise and underdeliver. They do the exact opposite. So I think that 8.5 million sub number for Q4 and one of their strongest content slates ever, according to them, for the quarter, is to me a reflection that they could easily surpass that number. Which, so again, we may have to wait a little bit to get the stock working again to the upside. But I think longer term, they're still the gold standard in streaming. Every one of their competitors of late has kind of talked down their streaming subs, from Disney to Comcast with Peacock, Discovery as well. And you're not hearing that kind of tone from Netflix, which is very bullish. Free cash flow positive from 2022 and beyond. So the story is intact. Again, just may take a little bit more time for here, again, given its relative outperformance over the past kind of 2 months or so.
Yeah, trading at $6.27 a share. Joel, I want to shift to another tech name that will be in focus today, and that is Tesla, reporting results after the bell. We've seen shares rise by as much as 50% since hitting their low for the year back in May, and now moving back towards that $900 level. Could these results help propel Tesla to new record highs?
Yeah, I mean, it's funny because it's a very similar setup to Netflix. Like you said, the stock's up 50 to 60% since they bottomed in May. Clearly, the bar has been raised. But I think we're kind of Tesla's story is different, and I think longer term you want to be buying it probably into 2020. I think you want to be buying in 2022. China demand last quarter, it was fantastic, and that was kind of the highlight of their delivery number earlier in October. And they have factories coming online more and ramping capacity in both Austin and Berlin, and that's the key to the story, to kind of improve their margins, reduce some of the bottleneck issues that they've had, especially relying on Shanghai as an export hub. They can now, kind of shift some of that deliveries to Europe out of their Berlin factory. So I think the Netflix story, or sorry, Tesla story is very interesting from here with what we're seeing in China and what they're doing in terms of production wise. And so far, they seem to be the only major auto OEM that can navigate this chip shortage with any sort of execution. And I think that's where kind of they're separating themselves from the pack right now. For anyone who says they're not a real auto company, they're not making enough cars. Well, clearly Elon and company is doing something right because their delivery numbers are hitting street expectations.
Yeah, that's a great point, right? Record deliveries at a time when so many automakers are facing supply chain shortages. It was interesting hearing from Kathy Wood, one of the big bulls, of course, around Tesla at the annual Milken Institute Global Conference. And she said it could at some point, Tesla could at some point be a part of a new class of FANG stocks. Listen in.
We just want our clients to be exposed to the next FANGs, which are not going to be in the FANG category, but the next FANGs. And Tesla's becoming a FANG. You know, I think it'll end up in that grouping at some point. Yeah, we would sell. So our minimum hurdle rate of return expectation for a stock is 15% at an annualized rate over 5 years. So a doubling over 5 years. Tesla is about nearly a quadrupling over 5 years, so well within our range.
What do you think? Is she right? Can Tesla join the FANG trade?
I mean, fair enough. She's been dead right on the company. And funny enough, she's actually been selling into the Tesla strength over the past month or so. In terms of the stock, you know, quadrupling or whatever numbers she throws out there, I mean, that's a little bit of finger in the air stuff for me. And you know, I wish she kind of focused on more Tesla stories versus kind of buying some of the lower quality names. She kind of continues to add on to her losing positions. But I mean, yeah, that's right. I think the Tesla story, and we'll look back on 2021 and really see where they separated themselves from the pack. And it just comes down to execution, you know, ramping at the right time. And then kind of, I guess, Elon just kind of doing what he's doing. We're not hearing a lot of the nonsense that we've heard in years past. He's clearly just focused on kind of, you know, making great cars and hopefully, you know, capacity continues to ramp out of their new facilities.